Fear grips the world and gold hits records as a result. So far we had no meaningful pullback for stocks since November 2023. I'll explain which levels we can be expecting to hit in the next few days to weeks. Energy stocks, however, are hitting records as crude oil is again entering a new bull market. And we will also look at Bitcoin to see if it has stopped. All this and more in today's edition of MasterChartsTrading.com Market Recap for Friday, April 5th, 2024. Please hit the like button, subscribe to this channel, share this video, and make a comment or ask any questions that you like. These actions are exactly what keeps this channel going. Again, thank you very much for all the comments and shares and likes I've been getting lately. If you are a subscriber, stay tuned. We will cover a few stocks that we're going to be that we traded this week, various ETFs, a few large cap stocks. 3M looks interesting. Also a few of the speculative stocks. Futu Holdings, this is a cryptocurrency stock. Some of the other ones, nothing really stands out at this moment, but I'll except for possibly gold mining stocks, which have been on fire, and we have been trading it on the upside. If you're not yet a subscriber, go over to MasterChartsTrading.com, click on sign up for all the products. I will be using the proprietary MasterCharts Trading market indicators, which you can see on this chart, this green, blue, red, and yellow line, which you can get at my website. There's also a link in the description. Let's start with stocks this week. So we had a big red candlestick few days ago, yesterday rather, on Thursday. So today is Friday the 5th of April. Yesterday was Thursday the 4th of April. So this is a big red candlestick. It is also engulfing the previous day's candlestick from Wednesday the 3rd. So this is a classic bearish engulfing pattern. We have two candlesticks. One is from the 3rd of April, the other one from 4th of April. Thursday, the big red candlestick completely covers the entire range of previous candlestick from the day before. So this is a classic bearish engulfing candle pattern rather. Question is this the top? Now we can kind of try to ascertain if that's the fact. So several technical things that are going on here. So number one, we had this gap down between 1st of April and 2nd of April. Okay, so that was number one, gap down. We also had, like I just explained, this bearish engulfing pattern and no new highs yet. So so far there is a higher and higher likelihood that we will at least get a shallow pullback. So what do I mean by a shallow pullback, and which levels can we expect to hit? So I wrote here, we haven't touched the green line since November 2023. So this green line right there where I'm hovering, it sort of shows, I call it the first support, and we haven't actually touched it since mid-November of 2023. So we've been on a tear. Notice this up arrow back in early November 2023. This is exactly where we bought. This is exactly where I bought S&P 500. I bought it. I'm still open. I still have a position open. I bought it back in October actually of last year, but it's around the same area. Basically, what happened is we had previous records. We had a deep pullback towards the blue line, and this is all I really need to know is when we have this deep pullback towards the blue line, this is where I want to be buying. because at this point the risk is relatively low. And how do I define risk? I define risk by the distance to this yellow line. So from back in October of last year to the yellow line, there was not a lot of, relatively small distance. You could have technically bought it back in July of last year at previous records, and you would be still in, and you would be now in profit. However, it would take you, quite some time to come into profit, and the risk back there, where are you going to put your stop, right? So for me, the risk is basically new bear market. A new bear market is below the yellow line. Okay, so new bear market back in July would have been 20% away. But in October of last year, the new bear market was only 10% away. So yellow line. Okay. Currently, I don't want to be buying, obviously, because the risk is too high. I want to wait until we get a meaningful pullback. And to me, meaningful pullback would be towards the blue line, which is currently away from the current price action, is about 8% away. All right. Now, before we get there, before we get this relatively deep pullback where I would become quite interested, so like similar to what we had between last July and last October, we still haven't even gotten to the green line. Okay, so we need to basically wait and see what happens at this point, and this green line is actually not that far off. Okay, it's about 3% away. Now, as I just said, we haven't touched the green line actually since November of last year, so we are way overdue for a pullback. And it does seem like now would be a good time for that pullback. And there are plenty of reasons out there. There is not to do with the United States economy per se, but it probably has more to do with the world situation at large. We have stuff going on that's pretty scary in Europe between Ukraine, Russia, and now other countries are getting involved as well, in the sense of they're building up their militaries, they're reinstituting drafts. I'm hearing about this from, Wall Street Journal, for example. Baltic countries and some of the other countries in Europe are reinstituting draft. And so what's Russia doing? Oh, Russia is saying, look, they're reinstituting draft, they're preparing to attack us. So it's like a non-stop cycle. The NATO starts to build up its own military power in response to Russian aggression. Russians start to build up even further because they're saying that NATO is building up to attack them. So this is an atmosphere of mistrust, and it strongly reminds me of World War I situation, where very similar situation occurred, where basically the countries were on the brink of conflict, and they really needed just like an excuse. And the assassination of Archduke before the outbreak of World War I was just a final straw. What's going to happen now? I'm really just afraid to even think about, because right now we have much more power at our disposal, and there's much more people who could get badly hurt, displaced, etc. So this whole situation is pushing other things up. So I will get to gold in a second, but for now let's just kind of look at stocks and see where this is going. So let's look at weekly chart and see if we could ascertain of where these things are going. So looking at the weekly chart, this is a weekly candlesticks. Each candlestick is a week's worth of activity. I mean, this close, this is a weekly candlestick. This could be a hanging man candlestick. Hanging man, because it's at the top of the range. If it was at the bottom of the range, it would be considered like a hammer candlestick, but it's at the top of the range. So additionally, what's not good about this candlestick is the fact that we closed below the previous real body of the candle, so below the previous open. It's also a bearish engulfing, technically speaking, because the real body, this red part, is fully engulfing this green part of the previous candlestick from the week before. So, and it's a pretty big candlestick as well. So, by and large, it's not the best looking candlestick, and it just sure looks like we're about to break down. I mean, if we just draw a line, like a trend line, something like that, it's a pretty obvious trend line, right? So if we break below it, we could easily make a run to the downside. So again, where we're looking to, where is this run to the downside? Should it even unfold, where it's going to take us? So we're looking, first of all, first support is at the green line, which is about, like I said, around 3% away. And it's currently at about, I'm going to go back to S&P. It's about 5,060 or so. Okay, you can look on weekly chart, same thing, 5,060. So and it's a very, like, just a garden variety, tiny little pullback. Back in July, from the high to the low, we had a 10% pullback, and that's like again almost a very normal pullback. And right now we haven't even had a 3% pullback since November. So yes, we're definitely overextended to the upside. We're definitely overdue. Again, what is the reason for the pullback? It could be anything, but like last week, or this week on Thursday, this big red candlestick was caused by, let me think, it wasn't anything like particularly scary. It was just like, if I'm not mistaken, it was like, it was a statement by the Federal Reserve that they may not yet cut an interest rate. And that caused a pretty big selling. So people are really just waiting to sell, basically, I think, at this point. Could I be wrong? Sure. We could also just turn around and make a new record. That's also entirely possible. But like I just presented above, I think it's very, very possible that we will get a pullback, at least of 3%. At least we'll touch this green line. Now, when or if we get to this green line, which is, like I said, at around 5,060, a likelihood of an attempted bottom there, it would be quite high. So we would most likely try to bottom around there and then try to rally towards new records. And the question is, will we make new records? Because if we don't, we could try to get like maybe towards this previous high, attempt from from yesterday, from 4th of April, and maybe roll over again. So we will see in the next few weeks how deep of a pullback we will get, and whether or not this pullback will lead to another bounce higher. Hopefully that made some sense. Okay, let's look at dollar versus gold relationship again. So dollar and gold are important, or what dollar is doing is important to know what the gold is doing. So right now we have a weird situation, and I think even today I heard Chairman Powell talk about weird situations with unemployment, with interest rates, with what do you call it? With inflation, it's an unusual time. Okay, things are very unusual. There are some distortions in the economy that we didn't really have before. And this is one of those, again, one of those situations currently. So we have a situation where we have both dollar and gold in an uptrend. Okay, I define uptrend where security closes above the blue line. In this case, dollar DXY is also just recently closed above the blue line, and that means it's in an uptrend. Okay, and that means we're going to be expecting dollar to move higher. At the same time, we just hit an all-time high for gold. Okay, why do I care about dollar? It's because XAU divided by USD. If the bottom part of this equation is getting bigger, shouldn't this currency pair, gold US dollar, be pushing lower? It's not. It's going higher. So we can look at a gold versus dollar relationship, and we can see the correlation between gold and dollar, and it's relatively negative. So we have gold at the top here, dollar at the middle here, and this is a correlation coefficient. Okay, and notice that most of the time gold and dollar correlate, or they're doing opposite things. Usually if gold goes up, dollar goes down, and vice versa. Currently we have all of a sudden gold and dollar are pretty much started doing the same thing. Okay, you can see it's started to go into positive territory. So we have both gold and dollar going up at this point. It's an unusual situation, but it's not unheard of. It did happen in the past. So for now, we'll see where this goes, but like, we can't ignore it. You know, we're trading gold. We're buying gold. We're buying gold miners. So for example, here is the weekly chart of gold, and you can see upward facing arrows. This is how we trade. We just look at the blue line, and if we close above the blue line, you can get the same indicators on your chart. It's really easy. Just send me a message or sign up. Notice what's happening. We're hitting all-time highs for gold. Okay, so gold going up is, strictly speaking, inflation hedge, but I think it also has to do with just fear. If we have war going on in various parts of the world, people feel fearful because, you know, they want to, and as a result of that fear, what's the first thing they want to do? They want to have some sort of a tangible asset that doesn't easily depreciate, like paper currency. So gold is definitely it fits the bill. So pretty much everybody is buying gold at this point, and it's been hitting all-time high. Is this it for this move up? You know, it's impossible to tell. We can kind of just zoom out and see where this is going. So, okay, so I have pointed this one out in the past, but notice this highs from August 2020, another high from March 2022, and finally a breakout just a few weeks ago in March of this year. Okay, so we have broken out of this formation, and it's a classic cup and handle kind of situation, or I don't know, multiple cups and handles, maybe something like that. Okay, so this is just like a classic kind of breakout, and when these types of patterns do come up, we can look at how deep the pattern was. Okay, so this pattern was around 27%, or around 450 points. Okay, this depth was pattern that I just showed. Okay, so if we extend this to the upside, we can see that gold according to this pattern, could be going somewhat higher still. So we're looking at gold somewhere in around $2,500 area. It's currently at $2,300. So that's another, 10% or so from today's levels. And this will complete this, giant pattern that started back in July of 2020. Okay, what do you guys think? Is this a reasonable estimate? Do you think gold will go higher than 2,500? I mean, not necessarily immediately, but maybe sometime in the future. I think we're long gold, so we're buying gold and especially gold miners as well. So we're well positioned, I suppose, for gold to gain. But I'd like to hear what you guys think, so please make a comment in the comments section. For now, again, we're buying gold, we're long gold, we're not sure exactly where this is going, but it's things are scary, especially in Europe and Middle East. Things are quite scary. And of course, oil also just broke out into a new uptrend. So again, the way I define uptrend is when the security closes above the blue line. We have indeed done that. We have closed above the blue line. We can look at the weekly chart as well. There's the breakout. All right, there it is. There's a breakout on the weekly chart. Notice that the lower price levels somewhere in the 67-ish, $65 area, there's just like this floor, and the prices are just not going down lower than that. So notice we had multiple attempts in March 23, in May 23, and then again multiple attempts in June, July of 2023. Again an attempt right there in December of 2023, and yet again in January of 23 to pierce this lower, levels from like 67, 65 to $70 area. And it failed. The bears failed, so they never were able to pierce through that level. And as they say, what doesn't go down goes up, and indeed it did that. So notice what happened. We bottomed right around the yellow line right there in December, and then rallied from there. So right now we're seeing oil break to new multi-month high. It's not yet 52-week high, but 52-week highs are not far off. 52-week highs are another 9% away, and oil moves easily that much in a few days to a few weeks. So this is results of disruptions in the Red Sea, disruptions elsewhere, Russian oil, obviously. There is also just general unease about the state of affairs. So oil, this is one of those substances that we're just addicted to, and right now there is really no good alternative. Hopefully we will eventually get to the fusion where we can pretty much produce unlimited energy, and oil will become a dinosaur yet again. But for now, the world is dependent on it. We're fighting for it. There could be a lot of unrest, unfortunately, in the weeks, months, and possibly years ahead. So we need to be ready for that. Oil in an uptrend has been a boon to oil miners, or XLE, energy ETF. So we are trading energy ETF, actual alerts. Notice as way back in November, another one in December, and final very nice alert All of these alerts were actually open still because our stop would have been at the yellow line, so they were never stopped out. Okay, if you buy XLE, you just buy it, or you can buy options, but then you have this time delay. You don't know. I mean, if you bought it, if you bought it with my last alert, which was in February, beautiful move. That's a 15% move, 16, almost 17% move for energy. But if you bought it in December, you would have had to wait until a significant time later. So if you're buying options, I would usually buy them at least a year out, possibly more. Okay, so option expiration, I would buy options at least a year out. Did that make sense? If it didn't, again, make a comment or send me a message. You can also send me a message here on TradingView if you have an account. So actually, XLE is moving higher. We are long. Subscribers are long, and they're up, almost 17% now. This could continue because we're seeing oil. Like I just said, oil moving higher would make sense for oil miners or oil producers to move higher as well. XOP, oil, gas exploration and production ETF, also moved higher. It's almost 18% move. And once again, notice this upward facing arrows. That means we have indeed, we've been trading them on the upside. So situation is kind of scary, to tell you the truth. I'm really just worried pretty badly right now. Looking at Bitcoin, Bitcoin hit an all-time high in March, middle of March here. This is a 24-hour market. Remember this. I still use the setting for my indicators as 250, even though this is traded 24 hours. I think this is a good setting for the Bitcoin. If you're trading Bitcoin on monthly or on weekly charts, then I will still set length as 52. But the the actual levels may be slightly different. So for example, this blue line is currently at 55,428 on the weekly, but on the daily it's at 55,484. So it's slightly different, and that's because of the 7 days in the trading period. So 7 days for a security that's traded 24 hours is an arbitrary number, but we do need to divide it in some sort of a palatable interval. So weekly is actually a great number, I think, for Bitcoin. So notice the previous alerts here from May, June, and then again finally September of last year, with a nice gain of 158%. So hopefully you were able to get in. Right now, it's nothing really can be said. Not much can I say about this chart. It's a bullish chart. I don't want to be selling it, and I don't want to be buying it. I want to be just holding it. If or when we get to the blue line, so it's not that far, and we can get there easily. Can we get there, let's say in April? Sure. At that point, I'll be thinking about buying. Just like we were doing before, buying the blue line. There's no thinking involved. I actually was buying it myself as well. I got out a little too early. I got out in January. I should have waited, of course, but you never know. So I want to be waiting and doing nothing at this point. Can we break the new records? Sure, but again, I don't want to be buying this right now because of the risk. My risk, if I'm trading things like Bitcoin or oil, then my risk is at the red line. So if or when we get to the, let's say, blue line, which is currently at 55,000 or so, and I buy it there, then my stop would be at the red line. which is at 43,000 or so currently. So if the Bitcoin hits 43,000, that means it's going to be in a downtrend, and we need to start thinking about shorting it. And we were doing just that not so long ago. Okay, so for example, this alert back in 2022 resulted in over 80% gain. Okay, because it basically collapsed from about 46,000 to about 17,000. So Bitcoin is notoriously volatile. Currently it's in an uptrend, but who knows what's going to happen tomorrow. Again, what do you guys think? Do you think Bitcoin is overvalued? Do you think it's at fair value? If we get a pullback, would you be buying it? Or would you want to be shorting it right this instant? Other than that, thank you for listening all the way to the end. Head over to masterchartstrading.com, click on sign up for one of the products. So I have trading indicators. Again, these are these lines on the chart, this green, blue, red, and yellow line. They're available currently for tradingview.com. This is an online interface, and all you need to do is open a free TradingView account, and then go to my site, sign up, and I will open the door for you on tradingview.com so you can see the same lines on your chart. I also send out daily newsletter with a weekly video recap that I send out to my subscribers. For example, this week we'll be covering all of these various securities, lots of gold related you can see here, lots of various speculative securities, large cap stocks, as well as ETFs. And again, the best deal is to get both trading indicators and newsletters, and the best deal is to get a yearly subscription. You always get 7-day free trial, so you have a chance to cancel if you don't want it. The yearly subscription is equivalent of $49.95 per month. If you sign up for a monthly subscription, it's $59.95 per month for both. You can also just get the indicators or the newsletters both yearly and monthly. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video, make a comment, ask me questions. Thank you for watching. Have another great trading week. Bye-bye.